with that, I'm going to ask Sanjeev Kumar to help highlight what we can expect to see today. And Sanjeev, founder and CEO of WhiteSight, very pleased to have you here. Um, given your understanding of research into open finance across the globe, as well as in India, um, I'm looking forward to learning how this all plays out in this environment. Welcome.
Thanks a lot, Jan. Thanks for having me. Glad to be a part of such a wonderful event focused on open finance as well as the technology transformation that the financial world is going through.
Great. So I'll just wait one moment to make sure that your slides appear. Okay. Okay. Over to you.
All right. So before we start on open finance, I just wanted to start with the quote that came from Patrick Collison, who is the founder of Stripe, one of the most successful fintech companies in the world. And around 1 year back, he put out this tweet. And if you look at the tweet, a couple of things stand out. He's talking about not having a mindset of winning everything. He's talking about having a mindset of building and enabling successful ecosystems. And if you look at it, at the core of open finance or open banking, ecosystem building, ecosystem orchestration, ecosystem enablement, that is at the very core of open banking and open finance, which is so very different from how the financial industries have operated for the last century. So if you look at the last century of financial services industry, we had great successes in banks who are having $1 trillion assets on their books, and they have built massive enterprises in the process. What open banking brings to the table that the successful firms are no more looking to build massive enterprises. They are looking to build successful ecosystems. And that's how the future of financial services industry is going to emerge, where enterprises where ecosystems will be much more important than enterprises. So that's with that backdrop, I just wanted to start because open finance and open banking is one of the most important tools to get us there, from shifting the mentality, the business model, the operating model, from building bigger, massive enterprises to versatile ecosystems. Moving forward, if you look at other industries who have gone through massive disruption, and when I'm saying disruption, I'm not just talking about disruption at the level of distribution. So if you look at Spotify, if you look at Meta, if you look at Geo, if you look at Netflix and Amazon, they are no more distributors. They have started their business proposition by becoming a distributor and solve the last mile challenge of accessing the different industry products and allowing customers to access products through digital channels. But if you look at their current state, they do right from manufacturing the product that they are delivering, curating the product that they are delivering, and actually distributing the product to the end customer. So that is what I'm calling full stack transformation. So if you look at if you contrast the disruption that the other industries have gone through with the financial services industry, we are still undergoing massive level of changes, and we don't have a way to do full stack transformation unless we reimagine the financial world from the way the banking and financial products get built. Even though we have licensed players who have been given license to launch digital banks, to launch credit companies, but the whole full stack transformation is something that will still take a lot of time and a lot of effort from the ecosystem participants to come together and then reimagine how the financial services industry works today. And one of the massive difference, if you look at how the other industries have undergone transformation and how the financial service industry is undergoing transformation, is that in financial services industry, because we deal with actual hard-earned money of the people, it doesn't leave much more elbow room to make mistakes, and that's why financial services industry, they owing to be a massively regulated industry. There's a challenge in reimagining things from the ground up. However, if you look at what's happening, not just in the financial services industry, but also in how the central banks and the regulators have operated for so many years, there is reimagination, rebuilding happening right at the monetary products that have existed for so long. And if you think of monetary products like fiat currency, treasury bonds, foreign exchange reserves, etc., they are all going under a transformation among themselves where we are talking about central bank digital currencies, we are talking about cryptocurrencies, we are talking about stable coins, we are talking about algorithmic central banks and stuff like that, which has a rather profound impact on the way the financial services industry works today. And if you look at financial services industry in particular, the reimagination of banking products hasn't really happened in a big way. We do have digital bank accounts. We do have zero brokerage investment accounts. We do have on-demand insurance plans. However, if you look at the primary attributes of the financial services product, a lot is still pending, where we can reimagine the way the manufacturing of those financial products occur, where lifestyle products, the financial products, banking products, payment products, all of them can be combined in order to build something that is truly something that a customer will enjoy. So that level of factory level resetting is something that is still underway. And with the advent of decentralized finance, we are hoping we will accelerate the transformation that will happen not just at the not just at the distribution level, but also at the manufacturing level of the financial services industry. So why are we talking about all this in an open finance and open banking session? Because so often we think of open banking and open finance as a primary contributor to solve the distribution problem. And if you look at the history, they certainly had contributed a lot in solving the distribution problem because they allow fintechs and non-banks to embed financial products and enable distribution channels to customers. But if you look at the larger picture of open finance, which actually includes sharing of data between regulated entities and sometimes non-regulated entities also, depending on how the regulatory structure is placed in the country. But the core focus is, which is kind of remains same in almost every geography, is the customer consent-based data sharing. So the moment we talk about open finance, we primarily mention it from the angle of customer, that the customer is in charge of sharing data that the financial institutions have been holding for so many years with anyone, whether an individual or a small medium business or an enterprise, who will help them unlock value. And that decision is left to the cognizance of the customer with whom they are going to share the data. But if you look at the larger picture, it also enables bankers and fintechs to create new products because certain level of data access in the digital form was not available for the last so many years, which are now available at scale through open finance. So think of the ways credit products are built today. It's not just we are not just talking about smaller size credit products that the banks and the fintechs are distributing in the form of buy now pay later, but we are also talking about credit products which never existed before. We are also talking about credit cards which kind of coexist with debit cards. So we are talking about dual cards, which will have the feature of credit card as well as debit card, and customers can switch between them as and when they need it. So that kind of reimagination of financial products from the ground up is possible today because of the availability of data that the financial services manufacturers have now through open finance, and the way the enablement of financial services is happening, where we talk about all the technology players, whether it is a banking as a service company, whether it is a core banking company, whether it is a digital onboarding company, all of them actually benefit from the data that comes through open banking and open finance, because now they can enable the third parties as well as the bank owned channels to reach the customer in the most optimal way. So that is how the enablers also benefit from open finance. And finally, the distributors who actually get access to data and have the ability to onboard customers through digital processes, they are the massive beneficiaries of open finance, because that's how open finance enables massive scale distribution. So it doesn't matter who is actually manufacturing the product, the distribution can happen through third party channels. And that is how distribution is a massive beneficiary of open finance. And the full stack reimagination of financial services industry is something that can be facilitated, but also accelerated by how open finance takes shape in different parts of the world. Now, if you look at the way open finance has evolved over the years, so a lot of credit is given to the regulatory bodies in the UK who started the whole process in 2015, 2016, where the debate happened that the concentration of financial services in the players in the industry is so high that they almost control 80 to 90% of the assets and current accounts, etc. And that led to the beginning of open banking, which was picked up by a lot of banks in the UK in the form of launching open banking technology, or open banking data aggregation platform for themselves, but also for their end customers to perform simple account aggregation kind of a functionality. And then the fintechs joined the bandwagon, where they acquired massive number of customers, they acquired a lot of funding, not just from venture funds, but also from bigger banks like JP Morgan, who invested in Plaid alongside Goldman Sachs. So that level of interest from banks as investors in open banking companies really validated that there is true disruption that is going to come, and where banks are also going to have a role in that. And in the last couple of years, and in fact, this year has been some massive new entries from bigger players like Apple and Stripe joining the open banking and open finance phenomenon by launching and acquiring open banking players, which we'll look at in a couple of other slides. But mergers and acquisitions by players like Visa and MasterCard, where they acquired Finicity and Tink, which has kind of validated that Visa and MasterCard, owing to the network effects that they have, both on the bank side, but also on the fintech side, if they join the open banking phenomenon in a big way, then the problem of reaching to massive scale kind of disappears. And these are the components of momentum that open finance has acquired and is continuing on the same path if you look at it. Because all these contributing factors are now working in unison. So regulators are on board, banks are on board, fintechs obviously are a huge beneficiary of the open banking phenomenon. And a lot of the fintechs who kind of benefited as a third party in the beginning, because they are now a fully licensed bank, they also act as a data provider rather than just accessing data from other banks. But yeah, entry of players like Stripe and Apple and Visa and MasterCard through acquisition as well as through in-house launching of products in the open finance segment will accelerate the momentum that the phenomenon has enjoyed in the last several years. Moving forward, there was a wonderful report that was released yesterday, or I think 2 days back, by Tink, which kind of plots the maturity index of how open finance has has been taking shape in different countries. And if you look at it, several countries like Sweden and UK are definitely better placed in this map. But there are emerging countries like India, Brazil, Bahrain, which kind of tells you that the phenomenon has truly gone global. It is not like only the developed markets are enjoying the benefits of open banking and open finance, but we have a lot of emerging markets and developing markets who are participating and obviously taking their own route to implement open finance. And that is where, if you look at India, it is kind of placed below on the regulatory support angle. Because in India, we haven't made it mandatory for banks to kind of share data with the third parties. And that is where I think India, owing to the complexity that we have in India, not just in terms of how the financial services industry operates, but also in terms of a very large distribution of customer segments who may not even understand what is open banking, even after a lot of customer awareness campaigns. So I think that's why the regulators haven't mandated the data sharing to bigger banks in India. However, there has been significant nudges coming from the central bank as well as from the Ministry of Finance that banks have to participate in the open banking and open finance phenomenon, which kind of bodes well for the industry in India, both from the fintech side, but also from the bank side. And the last thing that I wanted to mention here is India is very different from the way how other countries have progressed on their open banking, which is more like market-led approach. In India, the government has actually collaborated with the ecosystem to build something that we call digital public infrastructure, which is also called India Stack, which has so many components to it. And now a lot of those components work with each other to unlock significant value for the incumbent banks as well as for the digital entrants from other industries. So that level of building a digital public infrastructure that allows unfettered access to financial services participants kind of enables an exponential growth in the industry, as we have seen with the micropayments volume growth that we have enjoyed in India. The similar level of manufacturing level disruption is something, if we can unlock, then I think open finance and open banking would really realize the vision of financial inclusion, not just in terms of opening bank accounts in India, but also in terms of enabling access to credit on demand for different segments of the country, access to investment products, access to insurance, especially as we come out of pandemic. We are in a position of a very heightened level of awareness from consumers around insurance and investment products. So that is where I feel a lot of success can be unlocked in India if we kind of have a way where the way financial services products are built from ground up changes. And we will look at some of the initiatives in detail on how India is trying to position it. But before that, I just wanted to touch upon a couple of adjacent industry trends which are contributing to the open banking momentum, but also, benefiting from how open banking is taking shape. So if you look at the Indian market, and there's a lot of noise and hype around super app. Everyone wants to become a super app eventually, because that is how people see the future of bigger ecosystem and bigger enterprises are going to shape out. Um, if you look at the biggest super app candidate in India, we obviously have Tata, which has already launched Tata New. Then we have Geo, which has built quite a lot of diverse offerings in different industries. And then we have Flipkart, which is a digital e-commerce company, which has built quite a few things around in and around e-commerce. So all this super app hype, if you look at it at the end of the day, kind of will benefit and ride on the wave of open finance, because super apps are not just combining different services for the customer. It is also allowing the data sharing to happen between different apps that the consumer uses, so that the kind of demand side efficiencies can be unlocked by the super app. And that's how the WeChat story of massive growth and scalability is something. It's not just the supply side efficiency that WeChat enjoyed, but because they understood the entire digital footprint and behavior of the customer, they were able to build a massive ecosystem with kind of services all the needs of the customer from one app. So that's how we feel super app is something that is going to have a lot of interplay with open banking. On the fintech side, there are a lot of players who kind of started small with one proposition, and that phenomenon was called unbundling of finance, where you build one product for one customer segment, which is traditionally underserved by the traditional banks, and then you perfect that service for that customer, and then you move on from there. So if you look at a lot of examples are from the developed markets, but we also have a lot of examples from developing markets like Philippines, Korea, India, where the whole rebundling strategy has been taking shape. And the whole rebundling is not just around financial services. It is also by clubbing the lifestyle services that the customer uses. And this interplay of financial services with lifestyle services is something that kind of uh, get a boost in the arm, because the data sharing that will happen based on customer consent. And the final thing that I just wanted to touch upon was is something that we call at WhiteSight intersection, where we talk about intersection of either two sectors, two industries, two product categories, etc. So if you look at this intersection, there's a crossover happening between neobanks and BNPL providers. So a lot of neobanks which started with a current account, savings account, and prepaid card and debit card kind of product, they are now moving to add buy now pay later to their portfolio of services in order to bring a credit products to their customers, and also understand the credit behavior of the customers, right? So this is the way neobanks are trying to become step their first journey on becoming a credit provider. And on the other hand, if you look at the buy now pay later companies, they are launching digital banks like products like debit cards, bank account, and other payment products to kind of leverage the full engagement opportunities that the customer base that they currently have presents to them. And the final thing I just wanted to touch upon, the major event that happened a couple of months back, was the acquisition of Credit Kudos, which is a credit trading agency in UK. Just like we have TransUnion, CRIF, and Experian in India. So they are a new credit rating agency in the UK. Along with being that, they also have an open banking license, which is the AISP license, which allows them to aggregate data from banks based on customer consent. So that level of acquisitions by Apple in the open banking space kind of enables a whole different level of momentum, where it is no more a game which kind of is moving forward with the participation from banks and fintechs. But the moment a big giant like Apple joins the industry, I'm sure there will be so many ways this can go through, and we can all make our predictions. But the final thing is, if you look at the data value with what Apple has and what Credit Kudos brings to the table, you can just see what can be done with this data. Of course, with the consent and active participation with the customer, because Apple isn't just a data company. They take the way, at least the mindset of the customer is that Apple treats their privacy really well. So this kind of enables a different level of education for customers and how they can benefit from their data. Moving forward, I just wanted to touch upon a couple of things about India. So if you look at the traditional snapshot of India, people talk about different companies across payments, lending, investment, insurance, etc. But this is like a very, very traditional way of looking at the fintech industry. A better way to look at the fintech industry is like this, where there's a lot of overlap that is happening between payments companies launching credit products, credit companies launching payment gateways, neobanks getting into so many other things. And then you have financial software or infrastructure platforms who are kind of enabling a lot of innovation that we get to see in the market. So a lot of overlap between different sectors of the company that has started to happen, which will enable a more granular and more useful level of data that will be available in the industry to build and distribute financial products on. So that's the way the kind of fintech landscape is evolving in India. At WhiteSight, we look at it even a little differently. If you look at this slide, I'm talking about 6 categories which are kind of having a lot of interplay among each other. But these are the kind of buzzwords that people have started to use. And if we look beneath the surface, if you look at it across these 6 categories, we have fintech players where the technology takes prominence, where they are either building the tech stack or the middleware on which the financial services are going to get offered. And then you have financial services providers who are the customer facing companies who either use one of or more of these technology providers to build their solutions, or they themselves participate in the technology layer themselves. So the key thing to notice here is there are a couple of key things to notice here, right? So one is, if you look at the company Stripe that I started my slides from, they are present in almost all of these. So they have just launched open banking and open finance product. They have been doing digital finance for quite a long time in partnership with banks and payment networks in the form of becoming a payment facilitator and acquirer. They have a product called Stripe Treasury, which is their embedded finance platform that they offer to fintechs and anyone who wants to launch a financial product in partnership with their banking partners. They had partnered with Shopify last year, which was a massive platform play, which kind of allowed them to go into building platforms and getting access to all the customers that Shopify would have. And in decentralized finance, they have just started at least enabling merchants acceptance of the crypto. And finally, in green finance, which is kind of one of the most important trends that is in a very nascent stage today, they do a lot of things on carbon sequestration technology, investments with other partners in climate tech companies. So that's how the industry has been evolving. If you look at the Indian counterparts, that's where the opportunity is, right? So almost all the companies which are there in the global section of the technology providers section, almost all of them are either unicorns or they are nearing the unicorn valuation. If you look at the Indian component, there I think you have just a couple. You have Open, which turned unicorn last week, and then you have Vita. Of course, you have Zerodha and Pine Labs, which are in a different shape because they have the consumer facing offering also. But if you just look at the technology providers, I strongly believe that the next set of unicorns from India should come from this space, and not just because there's an opportunity to build technology infrastructure which will propel the transformation of the industry, but also because India has a massive talent that is anyway used by a lot of global companies. So if you look at a lot of global companies have set up their technology arm in India, including the likes of Revolut. And that is where I feel, because of the talent that we have and the demand that the country presents, the technology providers turning into unicorns is going to be the next big story out of the fintech space. And this is just a slide which kind of talks about how the fintech industry is transforming along these six axes that I've presented in the last slide. But what I wanted to focus on was this, that why open finance is an extremely important trend, because it has interplay with almost all of the future of fintech themes that we saw in the previous slide. So if you look at on the embedded finance, Klarna, they have launched an open banking product. They had that open banking product for quite some time after they acquired SoFort, but they did a lot of rebranding and launched Klarna Cosma a couple of months back, and they are going to build on it. Affirm has a great partnership with Plaid in the US, and that has helped them unlock a lot of value in how they distribute their credit products to customers. On the digital side, banks like Starling and Chime, they partner with a lot of data aggregators in the UK and the US, respectively, to enable digital onboarding, enable marketplaces, enable account aggregation for customers. Green finance companies like Kogo and Doconomy, they partner with the likes of Ting in Europe to kind of enable access to data that can help banks and fintechs calculate carbon footprints of their customers. And then you have platform companies like Doe and Revolut who are trying to build a platform or a financial super app, and they have their respective partnership with the open finance players. And lastly, the decentralized finance players have just started to, partner up with the open banking players, especially on the payment side, to enable on-ramp access to kind of DeFi products by making payments through fiat money. So that's how the interplay between open finance and other emerging fintech teams kind of makes the whole thing super important. Um, Finally, I just wanted to touch upon what's happening in India. And if you look at the India open banking stack, we have quite a lot of things, but the primary thing which kind of differentiates this stack with other players is kind of the account aggregator layer, which you see in the second layer from the bottom. Now, these players are data blind, so they are not allowed to do a lot of data analytics and build workflows, unlike the counterparts in Europe and the US, where Plaid does everything from collecting data from banks to analyzing the data, building customer journeys, building onboarding process flows, etc. We have another layer called technical service providers, or the TSP, which kind of will come into play in a big way. And that's why I was referring that the next set of fintech unicorns from India should have a bigger representation of technology providers, because they will have a bigger role to play if the entire open finance journey has to pan out in India. And the other thing to notice is here is the industry infrastructure, which kind of separates how India is very different from other parts of the world, because this industry infrastructure is something that the government and the regulatory bodies and the other ecosystem participants have jointly built together. And because it is owned by the government, it allows unfettered access to anyone who is regulated and who should get access to those kind of infrastructure. So that kind of sets the tone for a massive disruption in the industry. I think this is a slide which talks about how the industry has evolved. I just wanted to touch upon two things that happened in the last couple of months. One is the launch of ONDC platform, which is the Open Network for Digital Commerce, which was announced, which will set up interoperable and ecosystem level business model for digital commerce in India, and the setting up of digital banking units in India, which was announced a couple of months back by RBI. And I think the plan is to set up almost 50 plus digital banking units in India going forward. So all this will kind of have a ride as open finance kind of moves forward. So I think going forward, this is the way we are looking at open finance and how the industry is evolving. We are not going to, stay at open finance. There is an open economy, which some people call open data also, but I prefer to call it open economy because that's like the logical transition from financial services industry to other industries like e-commerce, payroll, utility, healthcare. where the data sharing will happen across industry participants and not just inside the financial services industry participants. So the evolution road is long and challenging. However, if you look at the way open banking has progressed in the last couple of years, not just in developed markets but globally, we do have a lot of successful milestones that can be built upon to transition towards the open economy landscape. So with this, I would like to uh, hand it over to John.
Thanks very much, Sanjeev. It's a great overview. And I actually have several questions related to this because what we've seen where regulators have driven open banking is that it tends to happen a little slowly. The experience in Europe with PSD2 was the regulator having to push very hard for banks to open up. Um, but the differences in India seem to be um, more marked because on the one hand you have the PSD2 is partly about account information and partly about access to payments network. In India, the rapid adoption of UPI has it's gone much faster than uh, startups getting access to the payments network in Europe, even though they're both sort of government initiatives. And what you mentioned about DEPA, the account aggregation regulation, it started later than is much more recent than PSD2 and the UK's open banking initiative, but it seems like there's a more rapid adoption. Can you just talk about why you think this is happening much faster in India than it's taken Europe to get going?
Yeah, absolutely. Thanks for that, John. And if you look at India's uh, transformation journey, especially in the financial services industry, as you said, we started on the payment side and not on the data sharing side where other countries have gone through. If you look at the way that the industry has progressed, uh, especially if you look at the banking industry of India and let's say UK, right? So we didn't have a lot of digital channels problem in India. The incumbent banks had a great digital website, digital apps in the store. We didn't have the problem of overdraft and predatory lending products by the incumbents where the customers are unaware and they are getting a lot of issues in paying over interest that rates that they cannot afford. The problem was in the underlying payment infrastructure that kind of the government solved by setting up UPI. And because of that, what happened, and this is what people call that India has become data rich before becoming financially rich, right? And a lot of data richness comes from how people actually pay for the services and the product that they buy. And because of the digital ways of paying, a lot of digital footprint has already been created in the market today. It doesn't matter whether you are from a rural segment or a semi-urban segment or a urban segment. There's a lot of data footprint that is available in the country on almost every customer segment. Now, if you look at the whole account aggregator journey that the country has been going through, so it's not a new thing. Uh, However, it has taken quite a lot of time. So the first licenses were set up by RBI back in 2016, and now we are standing in 2022. So a lot of account aggregator companies were actually applying and getting licenses in the couple of years after the RBI launched it. But what has stalled the progress initially was non-availability and having very minimal incentive by the bigger banks on participating in the journey, right? Now, if you look at it, Today we are in a situation where bigger banks have also built platforms to distribute financial products either on their own or in partnership with other fintech and non-banking players. So the distribution channel is kind of set up. Now, there is little doubt in a bank's mind that if we kind of participate in the open banking and open finance journey, we are not just going to share data and letting others to build on top of it. We are also going to become the beneficiary because we will be getting data from other banks and fintechs who are operating as a regulated entity in the country. So I feel the next 12 to 18 months will be critical because there will be renewed interest from the incumbent banks and bigger fintechs who now want to participate in a big way and taking the momentum forward. And the last thing I want to add is there's a lot of interest in actually supporting the small, medium businesses in the country as we come out of pandemic. And if you look at open banking in other parts of the world, the consumer focused use cases have so far gotten highlighted. But in my personal view, the opportunity on the small, medium business side kind of outstrips the opportunity on the consumer side, especially in a country like India, where there's a lot of government focus on helping the SME industry grow. And that's where I think with initiatives like Open, Sahai, will come into play. And that's why I touched upon ONDC, because ONDC talks about a lot of support for merchants and small micro enterprises. And I feel that segment will kind of present such a massive opportunity that open banking can unlock, that will create the pull factor for the fintechs and banks to participate in.
Okay, very very interesting. The other another thing that is a little different with India is the existence of the super apps, which perhaps hasn't happened as quickly in some of the developed markets. So this is I guess an opportunity for many more players to participate in this. And the other thing I was interested in your chart before because you had these categories, and Stripe was in every one of them. Now, Stripe is often held up when we talk about APIs as a product as being the only way you can consume Stripe's product is through the API. They do one thing and they do one thing well. But you just showed us a chart that says, well, okay, they might have done one thing, but they've applied the same thinking to several other things. And so there's a trajectory there that they've realized there are adjacent things that we can do. And it's not just taking a payment, but we can take subscription billing payments, but we can take other types of things and use the capabilities that they've already built and extend those into new products and services. Do you see that happening with the India-based startup, particularly the payments-related ones like Paytm? What sort of things do you see happening there?
Yeah, so that's a great point. And if you look at it, uh, there is a lot of focus on unbundling the technology infrastructure that Stripe has managed to achieve. And because they have done that, they can build so many things on top of it. Especially in India, if you look at, I personally see a lot of opportunity for the infrastructure players who are kind of building the technical infrastructure on which the open banking and open finance journey will happen. And players like Open, so Bank Open or Open Financial, it's a neo bank, so to say, in the country,
Mm.
but they also have a technology arm, and I'm sure you have a speaker from their
Yes,
company
and
who will
I'm
talk more
speaking
about
later.
it. So I don't
Yeah.
want to
Mhm.
steal their thunder. But what they are doing is trying to come up with a proposition that will not just help them in building digital services, but also monetize that technology infrastructure by providing it to banks, both in India and outside India, to build on top of that, which I feel will be marvelous in the way they are going about it. And there are quite a few players in the fintech infrastructure space, like M2P, like Decentro, like Setu. All of them are doing bits and pieces of API infrastructure unbundling. like what Stripe has done in their own manner, but because obviously they are much smaller today. But the kind of opportunity the country presents in terms of the massive volumes, both on the consumer as well as on the business side, I think they have a positioning where they can grow rather quickly.
Great. Thanks very much for sharing those insights, Sanjeev. Great overview of how open finance is unfolding in India and what we can expect to see in the future. And it's a great intro to some of our later speakers. You mentioned open. We're also exploring things like BNPL and the India InsurTech stack and the like. So thank you very much.
Thanks, Josh. Great to be